All right, should be good to go. Looking good on my end. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. It is 8 p.m. Eastern Standard Time on 10/24/2021. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so decent amount of volatility over this past week and weekend. A lot to talk about. Obviously, plenty of news, plenty of movements in the various markets. Obviously, lots to talk about. We'll do our typical rundown. I do want to talk just for a second about SHIB. I know people have been going crazy, getting excited about SHIB. There's been rumors basically that Robinhood is going to list it. So it had a pretty powerful run up. And it's now giving back the majority of those gains. Technically, it looked like it was due for a burst to the upside. So it was not unexpected to see that move take place. Just be real careful right now. As you know, there's no official move like news or anything. It was basically just buy the rumor, sell the news type thing. But they basically sent out like a feeler, like who was interested in a SHIB on the platform. So everybody tried to front run the listing. So just be careful. We're going to keep seeing these like quick little run ups and then sell off, and then people just end up upside down. So make sure you're not one of the masses who ends up getting stuck in these, trash bag, different projects or coins or whatever. Same with Donald Trump's new platform. He basically just did a SPAC for like a social media platform or whatever. And same thing, statistically speaking, look at SPACs and like it's like 75% of them or something like that are like currently trading under their initial price. So, they run up real quick, sell off. How many years is it going to be before there's even like an actual social media program or whatever? Probably going to be a while. So, you're basically buying into an idea before there's anything to back it up with. So you just got to be careful. I'm not saying it won't be successful in the long run. I can tell you SHIB will not be successful in the long run. But, Trump social media network, sure, it's just going to be the opposite of like, Zuckerberg's network or whatever you want to say. It's just going to be the right-wing version of our current system, as where now we have like the left-wing version. I think eventually we need, a down the middle or neutral one. But that's all beside the fact. Obviously the division and polarity is all by design. So let's take a look at the 10-year. 10-year is still on that same trajectory. Nothing has changed here. We are still powerfully moving to the upside. We do have the 200 simple above the 200 exponential from that cooling off period. But I think if we, I know if we stay up here long enough, 200 exponential will start to climb back up here. At this point in time, we're just chopping through all this resistance. There's quite a bit of resistance. We basically traded in this area from like the end of February till mid-June. So chopped around here for a few months. And now it's just taking us a little time to burn through that. Eventually, when we do burst through that, and then we obviously have all this resistance / support from before. I expect basically a quick move up to like 2% sometime in the very near future. And then after that, we just have level after level after level where these things are going to push up. We are up near, obviously in the bullish control zone, got the hard sell consolidating at that range. We have still blue slope line, histogram still looking good, moving averages looking good. But it would not be unrealistic to think once again we get another push up here and then another cooling off period. But that's how you want to see it. You want to see stair stepping up. If we go over to the weekly, we can see what's really taking place. We had the move all the way back up to the 200 exponential, found resistance, came back down, put in a higher low, and now we are pushing up. We're above the 200 exponential now. The next key area of resistance is going to be that 1.86 or around 2%. I think it'll push up to a nice even like 2% and then consolidate inside of the 200 exponential and simple. So I think we'll be range bound here for a little bit after another push up. We are below the slope line on the weekly. We have all green histograms above the zero line. So we would expect to see some resistance when the histogram itself runs into the slope. You typically will see some kind of resistance like this. What happens afterwards is what we're paying attention to. Does it get rejected like this and then go down into a consolidation or drawdown period? or does it just burst through it and then we see like continuation, like a situation like this? But in the end, what we're looking for is like bearish divergence to tell us that we've at least put in some sort of temporary top. So at this point in time, I think that resistance will come in right around like that 1.8 or 2.0, you know, which is another like 10 to 15%, you know, on the movement of the yield or velocity of the yield. But more importantly, we are still below the 200 exponential and simple. They're starting to level out, and we would expect to run into them very shortly. Obviously, stochastics are moving powerfully to the upside. And then if we just switch over to the monthly for our big picture, we have at this point in time confirmed the 8 and 21 cross back to the upside. All green histograms above the zero line, above the slope line, hard buy signal coming out of the bearish control zone. And obviously we see the stochastics all the way up here near the entrance of the bullish control zone. So, you know, as always, we can see the monthly is giving us a very clear picture, telling us that this is only just begun. While we would expect to see, you know, like some sort of resistance around the bullish control zone and consolidation period, we would expect higher highs eventually with what's taking place now. So once the slope line flips over blue, you know, once we get that move up here, 2.7 is going to be a very difficult resistance, as that is our 200 exponential and simple. And then obviously that lines up with our inverted head and shoulders or cup and handle pattern, measure move, Fibonacci extensions slash retracements. And that's going to give us roughly that same level. So everything right on schedule with the 10-year treasury yields doing exactly what we would expect. Most importantly, though, we do see for the first time here with our descending resistance line for the cup and handle, you know, we have basically touched that area here, consolidated, and then came back down, put in the handle of the cup and handle. And now we have actually broken above that, come back down, and we're looking for it to find support around this level before we get the measure move to the upside. So, and if we just look at the TLT, which is the 20-year treasury bonds, not the actual yields, but the bonds, we can see, you know, very similar inverted chart. We had broken down from a powerful uptrend, well below the 200 exponential and simple, tried to reclaim that area, failed to do so. Now we've broken down below them. The slopes have flipped back over negative, and we would expect continuation to the downside, which is what we've been getting. So no surprise there. Let's go to the VIX next. Obviously, we see we are still just in our sideways channel with our descending channel as well. Neutral area being somewhere between 18 and like 21. And we are getting down towards the bottom of the descending channel now. So we would expect some volatility to pick up in the near future, right around the level we're at, and somewhere between like, you know, 14 to 15 and a half. So if we're at 15.44 now, you know, we would expect some volatility in the markets. Typically that volatility translates into stocks as sell-off, because we just float up on low volatility and just continue melting up to the upside. And then all of a sudden we get a volatility spike, typically a sell-off. So we are basically getting close to probably seeing another quick little move there. All right, so, and we're slowly getting, you know, we're basically halfway down on our lower levels of the larger sideways channel. So the closer we get to the bottom or the top of this by basically breaking out of our channel here, the more likely we are to get like a market top or a market bottom, like a violent big move. So obviously we're getting closer to the bottom now. We're about halfway through the bottom half. So we're at like the 25% range. So when we're at the 25% range, we would expect a burst to the upside, you know, and typically that's going to align with more of like a market top, or at least a temporary top. And then if we go to U.S. oil, basically trading up here at all-time highs, expecting continuation. I've been talking about this for literally months. We expected the sell-off back down to like 60. Here we are now at 80, which was our first price target. Next price target is basically 100. It is starting to get a little tired up here, but I expect the melt up to continue, as there's no reason it's not going to. You know, there's obviously still the same amount of demand and no extra supply coming online. So we would expect continuation of the trend to the upside, especially as we get into like the holiday and end of year months. So Dow Jones closing at new all-time highs, bullish control zone near the 100 level. So, you know, we're basically up here at 96, once again at the area where we typically see a temporary top on the daily. Nothing to see here. continue to melt up. We are seeing some weakness though, as the 200 simple is above the 200 exponential, but we have reclaimed the slope line, continuing to the upside as expected. S&P closing at previous all-time highs here, bullish control zone. Once again, stochastics up here at basically 97, 98. So once again, you know, not a lot of room left to run on the daily, but no reason we're just going to all of a sudden sell off and go to zero like everybody wants. IXIC, Nasdaq, same thing, very high levels. This one is putting in a slightly lower high, so a little less bullish in comparison. And then, of course, the Russell, which is just dead money. It has literally done nothing all year long. Just trading inside the range. Top of the range being 23.42. Bottom of the range being 21.30. And the heart line, obviously, here at 22.37. We put in this little like triangle pattern. Broke out of the triangle, retested the breakout. And now we're just seeing that continuation. The first run should take us up basically to that 23.04 level. If we can get through that, will take us up to the top of the range. Eventually, we'll break out of this range, but until we actually get a breakout, we would just expect trading inside the range to continue, obviously. XLB material. So we had this descending triangle, which is technically a bearish or more bearish pattern, favorable to the bears. But now here we are at the top of the range, technically broken out. And now here we are retesting the breakout for support. If the support holds, we would expect continuation to the upside and a powerful move, probably up and probably close to 100, but at least to 90. If we do not hold this level, we would expect it to come back down to the support somewhere around like 78 or so. Not really tradable range at this point in time. The indicator oscillators are near the top levels, so maybe we don't see that continuation. More than likely, as always with these patterns, with these channels, charts, channels, triangles, etc., we expect them to just continue trading inside that range until that one time they break. So I would expect it to probably just sell back off and continue to range trade. XLC communication failed to cross that 821 back to the upside. That is a rejection as far as I'm concerned, and I would expect continuation down here now to the 200 exponential and simple at 77. If we just gap up all of a sudden and, you know, close this gap and open back above those lines, then maybe we see continuation to the upside. We did leave a little gap behind back here. Nothing too crazy. And again, you know, not really tradable range on this, but good to give us an overall view of the market. So XLY. Consumer discretionary, we've basically been trading inside this ascending wedge right here, broke out of the wedge, came back down, retested it, and now we would expect to see that continuation, that measure move, and that move up to $203. So our target to the upside is going to be, you know, basically the measure move breakout up here at 203. And again, it's, you know, at the more elevated levels, but momentum in its favor. XLE energy breaking out. Far from all-time highs, but breaking out to cycle highs here. Looks strong, seeing a little bit of weakness starting to come in. Probably a little overdue for some sort of pullback, but we did technically break out here, retest that support, and now we're seeing continuation. So I don't see any reason this isn't just going to keep moving to the upside. We've already played out the measure move. We're back up here retesting key levels. You guys know if we zoom out on this chart and look out here, you know, I have basically some pretty massive targets for energy. It could easily see another like 40 to 50% move to the upside. I see no reason why this, you know, long-time underperformer is not going to perform extremely well. Let's also keep in mind as well some key times. Should have looked at it with oil, but if we look at key price periods in energy, when did we have like big peaks in oil and energy? Well, around 2000, we had big peaks, highs, all-time highs. Around 2008, we had big peaks, highs, you know, all-time highs, depending on what we're looking at. So a lot of times, energy will run up and get extremely expensive, extremely overpriced, right around the peak of, you know, what amounts to like a cycle or short to mid-term top. So it's not unrealistic to think that energy is like bursting to the upside. We're seeing natural gas shortages. We're seeing, you know, all-time high gas prices, all-time, you know, well, not all-time high, but, you know, decade high oil prices, et cetera, et cetera. So is that just one more canary in the coal mine telling us we're probably getting closer to a top than a bottom? Well, for sure. XLI industrial, basically just range bound inside of our channel here. Hit the 200 exponential and simple, and now we're moving back up here. We'll see a bunch of resistance at like 106 at the top of the channel. Momentum in its favor. We are up here at 97, so basically maxed out on the stochastics. Not a lot of room to run. XLF financial breaking out to the upside. We would expect as yields rise, financials would be strong as well. A lot of earnings coming in and coming in positively. Obviously, what are the two main ways that the financial sector makes its money? Well, loans and investments. So even though loans are not yielding as good as they previously have in the past, the yields are low. Their investments are through the roof, so we would expect them to be doing extremely well. XLK technology, basically retesting the all-time highs. If we grind here long enough, I expect to break out to the upside, but again, at extremely high levels, so we need to cool off, consolidate, or possibly have a small retracement before continuation, but still very bullish. XLP, consumer staples. Again, we have a sideways channel here in green. We are basically we're at the bottom of the channel, retesting the 200 exponential and simple, starting to lose a little bit of momentum here, but here we are back at the top of the channel. Breakout to the upside would take us the measure move of the channel and back up to retest that red resistance, actually both resistance points, around like 75. That looks more likely than not. Now we're seeing green histograms above the red slope line. We are inside the bullish control zone and still have a little room to run. Would not be unrealistic to think we'd get a breakout here as we broke through a long time resistance here in yellow, came down to it, retested it as support, and now we're trying to move to the upside, and we have been consistently putting in higher highs. I expect consumer staples to break out to the upside here shortly. XLU utilities, basically getting that bounce again off the 200 exponential and simple. What we need to pay attention here on utilities is, we're basically just hanging on to the 200 exponential and simple while we are above them now, and this is technically bullish. Each little bounce that we're getting off here is like around the same or just decreasing, so we would expect a similar type move. I don't expect this thing to just burst to the upside and go to the moon or anything anytime soon, but overall have to stick with the bullish view on that. XLRE, real estate sector, again, momentum in its favor. It has flipped a blue slope line over. It is inside the bullish control zone, and we have reclaimed the 8 and 21 cross to the upside. So I think it's very likely this is putting in new all-time highs very soon. Let's keep in mind that a lot of these charts are showing weekly bearish divergence and some weakness on the monthly. So while we can continue to the upside for some time, we know this is not sustainable. Now, do I expect a stock market top anytime soon, especially before the end of the year? No, not at all. Not at all. XTN, transportation. Again, I would expect this to strengthen into the end of the year. The thing we have to look out for is this thing doing well because of demand, or is it doing well because of increased prices, or is it doing well because of a combination of the two? So overall, transportation sector retesting those highs, looking bullish. Like it wants to break back out to the upside. Still has the blue slope line. Obviously, massive amount of volume came in here. Uncharacteristically large amount of volume came in right here. So we are paying attention to that, as typically that will be, here it was a bottom, and then we saw some continuation. Here it was, basically a retest and top, and then we saw, continuation to the downside. So what's going to happen here? Is this going to be a top, and then we see a pullback here, or is this going to be like the breakout volume? Not clear at this point in time, but definitely that volume is notable. So jets, just to get like a little airplane view of our transportation. Here we have an ascending support line here in green. Here we have broken back down to that ascending support line here in green. Here we have some key Fibonacci levels, basically from the bottom of the range to the top of the range. And again, we have broken down below that. So it would not be unrealistic to think we would break down from this level. It would act as support until it breaks. It has acted as support many times. But assuming we do get a breakdown here, we would expect a retest. The 236 and the green support line act as resistance, and then the initial target to the downside would be 20. After that, it would be 18, and then I would look for at least a bounce off of each one of these, kind of like that slinky down the stairs. But realistically, I think the 0.5 is the area we'd be really paying attention to, as we see quite a bit of resistance here with that gap up. So we do have an unfilled gap back here, And a lot of people talk about gaps, and gaps always get filled, and this, that, and the other. The most important thing to pay attention to is consensus. What is a gap? A gap means that the price moved while the market was not open, so that there was people who didn't get to vote. Imagine if there's a vote and everybody, there's 10 people and we're all going to vote on something, but 5 of the people are out sick for the day, or 5 of the people are not at work, and then the other 5 people vote without them. And then when they come back to work for their, night shift votes, and they decide, we're getting rid of the water cooler and we're going to replace it with, Gatorade. So there's not going to be any water anymore. It's just going to be Gatorade only. And then the day shift people show up and they're like, hey, where's the water cooler? And they're like, oh, we voted and got rid of the water cooler, and now we just have, a Gatorade fountain. And it's like, oh, well, I kind of like the water cooler. Why didn't we get to vote on it? Well, this is the market not getting to vote. So oftentimes what happens is the price pulls back, and then eventually those people get to cast their votes, and then the market decides once they have all 10 votes instead of just the 5 people or whatever that got to vote right here. So it would not be unrealistic to think that this measure move, this breakdown, this Fibonacci level, and then also the gap fill will in fact get filled eventually. So, we'll see. We'll wait and see what happens there. I'm very bearish on airlines in general. I think it's just a matter of time before they're begging for another bailout. And it'd be good to consolidate these airlines. Some of them in particular are trash. We see they're getting pushback from their employees because they're treating them like garbage because of, government mandates and whatnot. The fact of the matter is, government can do what the government does and do it poorly. And then you got to let the private sector do what it's going to do. Because they're focused on profits. The government is focused on control. Private sector is focused on profits. In the end, if you want to have a successful, non-central planned economy, you need to focus on what matters, and that's profitable companies. Otherwise, they go out of business, and then you don't have them anymore. So, CEOs and shareholders need to, the company has to be run in a way that's beneficial to the actual company and shareholders, not to Uncle Sam and their central planning. So hail, ride hail, broken down below the 200 exponential. I don't know why I said ride hail, but hail ETF. Again, transportation sector below the 200 exponential and or below 200 simple, back above the 200 exponential, but trading inside of this triangle range. Again, I would expect essentially this 55.90 to act as support, this 59.78 to act as resistance. And then here we are at that top key resistance line as well. So I think more likely than not, this thing heads back down to 52. It's also bullish control zone, but starting to look a little tired up there. So yeah, UPS got that burst back to the upside as expected. Obviously put that trade setup in play, working out very nicely. Coming back up here once again to fill the gap. So we called the gap fill to the bottom, came down here, found support. Perfect entry on this. 15% move to the upside has almost played out for the gap fill back to the top. There's very good possibility this thing continues to float on up here as well, as typically seasonally, this is a very bullish time for UPS, FedEx, transportation in general, especially as people are having trouble getting their goods. And, we're seeing price rises in FedEx, UPS, United States Postal Service. Anybody pretty much that will move or transport anything for you is going to charge you more because there's plenty of demand. And, the system is breaking down. FedEx, same situation here. We had that breakdown. We have that gap fill potential back here at 250. We are headed back up there, about halfway there now. Volatility is much weaker. Breaking through this level here at 234, we'll see that instant burst right up here to 250. Matter of fact, I would not be surprised to see this thing just straight gap up here and then come back down, fill the gap back to the downside, and then see a movement up. Much less bullish. Obviously below 200 exponential and simple bull slope to the downside. But short term, we are seeing a little bit of momentum picking back up here. I don't think it's unrealistic to think that this gets back up to 260, 270. Again, I would expect it to be bullish going into the holiday season. Oh, good to see you, my man. Quick drop in, vote up, and looking forward to watching it later. Our kits, good to see you, my friend. Appreciate that. Yeah, make sure you like, subscribe, share. All that good stuff. DXY. So let's look at the dollar. Dollar has been playing out perfectly. We got the breakout to the upside. We are now retesting that previous top as support. I do expect a little bit of continuation back to the downside to either retest the 200 exponential, or again, we have that key support in place here. Basically the breakout of our Fibonacci slash head and shoulders around like 93. Could easily see it come down here to the bottom of this ascending broadening wedge and that 200 exponential. But very, very bullish on the dollar for eventual continuation up to like 95.6 to like 98, at least on that initial move. We are seeing basically a bullish reset. Prices going back down, indicator oscillators going back down, and then eventually we can see continuation to the upside. But it's unsustainable to just go up straight up all the time. And then if we just, I'm going to turn off the drawing tools here. If we just look at the weekly chart, we'll see we had the 821 cross back here, back to the upside. And now we're running into the 200 exponential, starting to grind away at those like sell orders essentially there. And then eventually we'd see a burst back up to like 94.8, which is a 200 simple. Continuation eventually, but a consolidation as we essentially eat through a key resistance area. And then obviously we have a decent amount of price action in this area through this range right here. But our next little top would be somewhere around that 200 simple. And then once we burst through the 200 simple, we'd be back on top of the 200 exponential and simple and expect to see continuation to the upside. Momentum in our favor. We obviously had that bullish divergence giving us a bottom right here, triple bullish divergence, and then our continuation back to the upside. We are running into some resistance up here at the bullish control zone on the weekly. But if we just broaden our horizon and take a look at the monthly, we'll see the most important thing that has ever happened in the dollar's history, going back to the 1980s. We are now on top of the 200 exponential and simple. 200 exponential and simple both have positive slope to the upside for the first time in this chart's existence, telling us we are now officially in a bull market. We have a hard buy signal coming out of the bearish control zone. We have multiple green histograms approaching the red slope line and zero line, at which point in time, if we burst through them, we would easily expect a test of 100 or higher on the DXY dollar currency index in relation to the basket of currencies that this represents. Yep. Ooh, let me switch that back. Very bullish on the dollar. Tesla, new all-time highs. Looks like it just wants to keep floating up here. Continuation. Massive short squeeze taking place right now. Obviously positive earnings. Uber looks like it's getting rejected off of the retest of the 200 exponential and simple. Looks like it wants to continue to the downside here. Break down. Pinterest got that gap fill as expected. We had that gap down here, sold back off, started melting to the downside, started putting in bullish divergence right here. Got the 821 cross, burst back up to retest the 200 exponential and simple. Got our initial trade setup of 21% to the upside. Obviously burst back up slightly higher than that, which gave us a basically almost perfect gap fill. Would not be unrealistic to think this thing cruises back up to as high as 70, but I think it's lost a lot of the momentum. Obviously this was all fueled by whatever you want to call it, rumors of a acquisition from PayPal. Wish trying to push back up here to the upside, trying to get that 821 cross back to the upside, trying to creep back up here and fill this gap, but starting to show some weakness. We are crossing above the zero line, a couple green histograms, blue slope line starting to show up. We're seeing some bullish divergence taking place right here. Not unrealistic to think this comes down here and puts in another lower low before the bullish divergence plays out. But at some time, I do expect this to burst back up to at least like $10 to $13. Is it going to happen right away? Probably not. I mean, it's just been getting crushed forever. I would expect it to just continue selling off. But when it does, this will be extremely profitable. Airbnb has reclaimed the 200 exponential and simple, now retesting them as support. If support holds, I would expect this to continue back to the upside and start just chewing through these levels up here on its way back to like $200. But it is losing momentum. Slope line has flipped over red. It has broken down below the 8 and 21. So while I would expect the 200 exponential and simple to act as support, they may not hold. This actually looks very weak. This is a key level where we would expect support or resistance. And now it looks like we are potentially going to roll back over to the downside here, but still to be determined. Bumble got a nice little burst back up to that key level once again. Same area once again, 821 have crossed back to the upside, hard buy signal. Momentum, once again flipping back in its favor. But as we've been discussing for months and months and months, we're basically just inside of this ascending triangle. While it did look like we were getting a breakout here, we spoke about specifically how it would not be unrealistic to think we just continue trading inside of our triangle. And here we are back at resistance again, getting a pretty strong rejection above that level. But again, until this thing makes up its mind one way or another, I'm not really, I don't have a position on it. I'm neutral on it until we determine what happens. If it does break above here, consolidate, I would expect it to move to the upside. If it breaks down below here and consolidates, I would expect it to break down to the downside. But again, just trading inside the range. Tightening range. Eventually we'll get a break, but probably not going to happen until it does. Matter of fact, I'll bet on that. Baidu. Once again, seeing all this talk about, Chinese tech sector is rebounding. It's coming back. This is it. It's going back bullish. Get back in. Here's your chance. You're going to miss out. It's over. The economy's recovered. Blah, 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 blah. What does this really look like on the chart? Well, it looks like a retest. It looks like a breakdown, retest of a 200 exponential, potentially a retest of a 200 simple as high as 204. And then I expect continuation. As long as we are below the 200 exponential and simple and they are red, which we are on both of those, this is a bear trend. This is the same thing you always see. Parabolic uptrend at the end of the trend, a retest of a 200 exponential and simple, breakdown from them, a retest of them, they act as resistance, and then continuation to the downside. That is what I expect to see. That is what will happen. Imagine that same chart and then fast forward a couple months from now and it will look like this. Parabolic trend to the upside, retest of a 200 exponential and simple, it breaks, retest as resistance of the 200 exponential and simple, and then melt down, waterfall, just flowing to the downside. This is Alibaba attempting to get that retest to try to stop this bear market, bear trend, but I do expect continuation. TME, same chart, just looks even worse. 10-cent music. Diddy, this thing just does whatever it wants. Add a key resistance / support area. It's just doing nothing. It's at resistance again. I expect it to sell back off until it breaks through and continues. BZ, Kanzun Limited, same thing. It's basically at this point in time, you could argue that it's putting in some sort of, like triangle pattern, but did it break out to the outside? Is it now just going to go to the moon? Is this it? And then we'll see continuation. I don't know. You really can't. Until it picks a direction, we really don't know what it's going to do. It's basically just depending on how you want to draw it. If you want to skip this little guy right here, that little guy, don't worry about that little guy. But essentially, just waiting to pick a direction with this key, like support / resistance line here in the middle. It looks like it's picking up momentum. It looks like it wants to go to the upside. And then, of course, this is a bearish candle. So, sort of inconclusive. And I would expect that to be the case until we get a move and continuation. JD.com, reclaiming the 200 exponential and simple. 200 simple still has a negative slope. Did take out the high right here, which is good. But a lot of times we will see that happen and then a break back down as that's like a false breakout. But no actual drawing tools here. Looks like we're basically just putting in like an ascending wedge right here. We have, higher lows, which is good. Higher highs, which is good. But overall, bearish pattern. It's typically when you sell off, you start melting back to the upside, and then eventually you get a breakdown from that level more often than not. We also have to be careful here as it is potentially putting in bearish divergence. So again, typically would break down. Neo retesting the 200 exponential. I would expect it to be range bound as long as it's between these two levels. It does look like it's getting ready to sell back off. The 821 have crossed back to the upside. Momentum is in its favor. We are in the bullish control zone. This has remained more bullish than most. Obviously in a favorable sector. We see Tesla at new all-time highs. So why isn't Neo? Well, you could argue that China is a little bit ahead as far as like the global trends and what's going to take place. So, maybe this is like the Tesla run up right here, and then we see continuation to the downside. Maybe there's something behind the scenes we don't know about in the numbers, or maybe China is telling us a little something about the global economy, about electric vehicles, just about the overall trends of everything. But we are picking up momentum here. We are reclaiming some key levels. EDU, still above the entry price for this right here. Still expecting that gap fill up to like 582. Rather see it happen sooner than later. We are inside the bullish control zone. 821 off cross back to the upside. We have momentum in our favor right here. Obviously chewing through some key resistance as this was resistance twice right here. The next target to the upside would be right around $3, which was that initial push up before continuation. And then if we get through that $3, I would expect a quick double from there. Peloton, once again, just rounding out that bottom, finding support here. Once again, bearish pattern. We basically have a descending triangle taking place here. Thought I had that on. Apparently did not. But we have some clear resistance up here at these levels. I would expect this to come back up and retest those levels once again. And then obviously on the downside, we have some clear support down here in yellow. So we basically just have a giant triangle. Eventually we will break out of the triangle. This obviously has a bearish favor, 66% to the downside, 33% to the upside. But we are picking up momentum. We are getting up near the bullish control zone. We have a hard buy coming out of the bearish control zone. But I would not expect it to get back up above like 106 or 107. But I don't know. Maybe I'm wrong. Apparently they're going to start manufacturing Pelotons in the United States. Or, maybe they're just going to make their sweatpants, sweatsuits here. I honestly don't know. It's a trash company. It's trash. TSM, Taiwan Semiconductors, got that initial push up off of the support right here. Still range-bound trading, getting rejected off the 200 simple, still above the 200 exponential. I expect it to just range trade right here and continue to just range trade inside of our little channel right here. Nothing to see here. Definitely don't want to be involved in this until, we figure out what's going to happen, as there's a lot of geopolitical uncertainty as to whether Taiwan will continue to exist as it does. And China seems to be like pressing like its little thumb down on Taiwan, just waiting for it to give one way or the other so that it can justify whatever actions happen to take place. But aside from that, let's take a look at Intel. Okay, so Intel finally got the move we've been discussing. I believe it was on Wednesday, and probably like 20 videos before that, where I said I would not be surprised to see Intel trading in the $40 range very, very soon. I did not think that it was going to be like a couple days later. But again, Intel is probably one of, if not the worst charts in all of existence, definitely in the semiconductor space. Just for a reminder, if you think Intel is a good deal, or you remember when Intel actually was a good company or anything like that, in 2000, the tech bubble burst. Intel was at $73 in that time. Over 20 years later, it has still failed to reclaim that same high. So in 20 years, in the biggest bull market of all time, while everything else was absolutely crushing it, while the semiconductor space is the most important, most influential, and most talked about it's ever been in all of existence, Intel still has failed to put in a new all-time high. Intel is by far one of the worst companies in existence, at least in this sector. We also notice here, not only has it failed to put in a new all-time high, we also have 3 drives of bearish divergence: a high, a lower high, a lower high, a high, a lower high, a lower high, a high, a higher high, a higher high once again, or same high. So we have 3 drives of bearish divergence. After failing to put in a new all-time high after 20-something years, I expect Intel to have a capitulation level event that takes it down to the low 30s, low 40s, high 30s. Hopefully this area acts as support and then get their shit together. And then a few years from now, they can actually be a good company. I would not be surprised to see Intel get a strong bounce in the mid 30s, a push back up and see resistance in the mid 40s, and then a further breakdown, maybe into the low to high 20s, somewhere in this range. But as far as I'm concerned, we have a very clear 1 wave, 2 wave, 3 wave, 4 wave. We see this acted actually as support right here on the longer time frames, and then a 5th parabolic wave to the upside, at which point in time we are now entered into a correction off of triple bearish divergence and a trash bag company Once they have some foundries in the United States and, they start doing some of the stuff that they're talking about doing, maybe that will change and Intel will be the best buy of the century. But as far as I'm concerned right now, Intel is total trash and the charts are backing me up. So I have proof. Nvidia, all-time highs. I expect this to continue up here, gaining momentum. Nvidia, excellent, one of the best performers and will continue to do so. AMD, very, very overvalued. If I look at the actual financials on AMD, I throw up in my mouth a little bit, but looks great right now. So, if I was going to buy either AMD or Nvidia, I would definitely buy Nvidia, but you could argue making all-time highs and in a key sector right now. So by all means, let the momentum flow. Let it run. But I would never, ever in a million years put money into AMD at these valuations. But I could say that about probably like 90% of the stock market right now. SMH, VanEck Semiconductor ETF. So if you can't pick and you want a little taste of them all, these are the big boys in here. There's a lot of trash in here as well. But, and by a lot of trash, I mean it has some Intel in here. Overall, doing well, but not performing as good as the top performers. Which obviously quite a few. But if you want that diversification on an ETF, it's never a bad idea, in my opinion. ARKK still looks like trash. Cathie Wood underperforming the market forever and will continue to underperform the market forever. Probably once every 10 years, she'll have a little burst to the upside or whatever. I think it's great that she's a woman. I think it's great that she's looking at all these like future trends and everything. But let's be real. Anybody that has invested in ARK, is basically just fueling her bullshit fire, as where you're just basically losing your money. Could have literally bought anything. Could have bought the S&P. Could have bought the Russell. Could have bought the Dow Jones. You would have done better than investing in anything Cathie Wood related. Could have bought Tesla. Could have bought could have bought anything, literally anything. Oil. Could have bought food from your store, steak or chicken, and you'd be better off than investing in an ARK fund. So ARKF, again, looks like total trash, but slightly better. Slightly better trash. It's like in the trash bin, but not quite rotten yet, but fell on the floor and there's like some hairs in it. So do you want it? No, definitely not. But is it better than like the rotten stuff in the trash bin? They got like flies and maggots crawling all over it. Yeah, it's better than that. So it's better than ARKK, but still trash. SKLZ, Skills, looks terrible. The 821 are attempting to cross back to the upside. We did get 2 previous attempts that failed. We are seeing some bullish divergence taking place. It would not be unrealistic to think this thing bursts up to like $15. Nice little like maybe underperforms a little bit. But overall, looks terrible. Broke down from its all-time, low or its inception price. And once that happens, typically that's going to act as a strong resistance. So it may not even be able to get above this level right here. Definitely not something I want to be quote unquote investing in. Would I rather own Skills or SHIB? Well, probably SHIB, unfortunately, because at least it has potential to keep running up, even though they're both still trash. Teladoc, TDOC, looks terrible. 200 exponential and simple have rolled over well below them, slope to the downside, trying to cross 821 back to the upside, holding as support for now, bullish control zone, seeing a little bit of momentum pick up, a little bit of bullish divergence taking place. We have 3 drives of bullish divergence from these 3 points right here. Would not be unrealistic to think this pushes up like another $20 or so. But again, clearly in a bear market. Clearly in a bear market. Palantir looks okay, maintaining just range bound between the 200 exponential and simple. At least it is above one of them and still technically has a positive slope on one of them. Hard buy signal coming out of the bearish control zone. Bunch of green histograms here. It's just sideways. It's sideways at support / resistance. So it's doing nothing. There's nothing to be done here. UBX, Unity Biotech, no product, no future, no potentials, new lows, continuing to put in new lows. Absolutely useless. There's nothing to see here. It's garbage. It's trash. It's on its way to zero and it's going there fast. Unity does not mean there won't be a opportunity to at some point in time scalp it. And that's the only reason I look at that chart. Unity Software has broken above those key levels. Finally got that gap fill up here. Now we need to see what happens. It has now filled the gap. It has used quite a bit of momentum and energy to get there. Is it now going to continue and chew through these levels and break to new all-time highs? Or is it going to break back down and try to reclaim, retest support? We'll have to wait and see. It is definitely probably going to, I shouldn't say definitely. It looks like it wants to consolidate here for a little bit and make up its mind, though. Zillow, obviously, they stopped buying houses. Is it bearish? Is it the top? Is it over? Well, they probably just got tired of losing money, which is pathetic because that was like, I want to say it was over 50% of the money that they were making or income that they were making was from flipping houses. And then it comes out that they have been consistently flipping houses at a loss. Does not surprise me. We're at new all-time highs. They were overpaying over market value for houses, and then they're having difficulties getting people to do the work. Big surprise. It's all stuff that's completely obvious. So you're buying something at all-time highs, trying to fix it up and flip it, and you can't find anybody to do the work. Meanwhile, the supplies that you need to get are hard to get and more expensive than usual, and somehow you can't figure out how to make a profit in those markets while the housing market itself is at all-time highs and bursting up like 30% in the past year. Yeah, probably not going to work. Maybe eventually will work, but clearly bear market, 200 exponential and simple to the downside. We're here hanging on to the 382 right now. I would not be surprised to see this at $65 very soon. We're currently at 92. So a breakdown to the 0.5 Fibonacci level is going to be an aggressive and powerful move. Is it possible we get the pushback up first, up to 120? It definitely is. Definitely is. There's just as much upside as there is downside at this point in time, about $30 in either direction. But as far as I'm concerned, is it going to go up or is it going to go down? I really don't know. There's some bullish divergence playing out right here. We're at a key support at the 382. It acted as support here as well. I would not be surprised to see an initial move back to the upside to like 120 before we get continuation to the downside. But I do expect continuation to the downside. So something like that. And then obviously we already have the green one in play. All right, so that is Zillow. Corsair is broken down. Hit our little entry box right here, but looks like it wants to continue rolling over. Nobody's stepping in to buy this up. I think it'll be at 23 very soon. Eventually, I think it will get some sort of bounce off one of these levels. 23, I think, will be a strong support, but we got to get there first. I don't think people are just stepping in at 24.48 to try to front run it. I think it's going to 23. We have a key top right here, and then, a little itty bitty gap right here. You could argue that's nothing, but realistically, I think once we come down to that level, we'll get a nice little bounce as we have quite a bit of support there. But I think we just bounce to another lower high. Obviously make great components, but the stock is not looking so hot. Zoom still looks like trash, has been looking like trash for over a year at this point in time. 1 year inside of this descending channel. This is a bullish pattern, technically, but bear market. 200 exponential and simple have rolled over. We're well below them. We are seeing now for the first time in a long time the 821 crossing back to the upside. So we potentially see a move like that, a retest of the 200 exponential and simple. I think it looks more and more likely. 21% move back to the upside for that retest with a 7% stop loss if we break down here and start to take out these lows. Looks very likely to me. Obviously having some trouble getting through this green resistance. This is also our gap fill as well. So looks very likely. But who knows? I mean, it's done nothing forever. So until it starts to move, people aren't going to get excited about it. And by the time it moves and people get excited about it, the move will be over and it will keep going down and they will be stuck holding my bags. But that's okay. And, we talk about the roaring 20s and the great class divide, the wealth divide. Do you want to be rich and make money, or do you want to follow the trend and be the debt slaves to, all of us that are successful in these markets? And that's why education is so important. Educate yourself. You can be successful in the future. Follow the herd, and you will follow them straight off a cliff. And like I said, you will be holding our bags. You will probably, in the end, be the debt slaves to the ruling class or slaves. Who knows? Who knows which direction we're going in? But in all reality, your wife and kids will probably be, OnlyFansing it up, they'll probably leave you behind because you're not a winner because you didn't make millions of dollars on Shiba Inu coin, and you tried to go to work like a normal human being and work hard, and instead you could just be rich, or they could do it without you. So in our pathetic world and pathetic future where everything is backwards and rampant speculation is successful over hard work, it reminds me of the Roaring 20s. And what came after that? Well, the Great Depression, obviously. So, but since the beginning of time, people have been talking about this is the end. It can't continue like this. The world is over. The coming of Christ, a meteor from the sky. The end of the Roman Empire. Like, people are always going to be like, this is the end. This is the end. This is the end. You know what? It's probably just going to be a top in speculation and markets and all that in the next few years, and then it's going to go down. We're going to be a bottom in quality of life and society, and then we'll slowly move back to the upside, and like a market, we'll breathe in, we'll breathe out, and we'll just continue to oscillate inside of a range. Square looks okay. Could go either way. 200 simple above the 200 exponential. Back above the slope line here. Bullish control zone. 821 of crossback to the upside. Looks like it wants to see continuation here. Yeah, I mean, realistically, still just range bound right here. I mean, Jack's talking about hyperinflation and fear mongering. So what does that do to Square's price? I don't know. Probably nothing, because no one cares what Jack thinks. I mean, but if crypto keeps going parabolic, Square should do well, right? PayPal breakdown. PayPal is going to buy Instagram. Immediately falls off a cliff. Below 200 exponential and simple. Looks bad. Starting to roll over the 200 exponential already. 200 simple has a flat slope right here. We still have a bunch of support down here, but breaking down from our ascending support right here, as we discussed, obviously broke down and started to form a descending channel right here, and now we have broken out of the bottom of the descending channel. So then we can take the measure move of the breakout of the channel that we broke out from the triangle that we're currently in, and that's going to take us back down to retest our lows right here, which is essentially where our support is in green, around 225 or something like that, at which point in time I would expect to bounce. Maybe we get a pushback up here and try to reclaim these levels, but this looks like it's rolling over. It's rolling over. Why is that? What does PayPal do? What is their job? Let's see. They're involved in cryptocurrency, so they should be doing well if people are buying crypto on PayPal. They do payment processing. Why is their stock not doing well? Are they not doing as much payment processing? Are they not making as much money because people are starting to spend less money? I don't know. That's weird. eBay, new all-time highs, continuation. It looks great still. Still looks awesome. Bullish control zone, bunch of momentum. Still expect this to just continue melting up. Snapchat finally got the dirty drop that we've been discussing. I was expecting the gap fill down here to $63. We obviously overshot that by a bunch. What does this have to do with? I don't know. Is Uncle Sam going to go after all the people with Snapchat premium memberships? Is Snapchat completely overvalued and not getting as many users or views or watch time as like some of the other stuff? I mean, there's rampant speculation on all that stuff, but we have left a massive gap to the upside now. So more likely than not, we see some continuation down to like $50. This thing is probably or already or very soon will be completely oversold, and then it will come back up to like 70. There's going to be a nice scalp for this. Do I think that it's worth $70? Probably not. Do I think that it's worth $50? Probably is. I mean, we'll see though. Some of these tech valuations got a little ridiculous, but there was quite a bit of price action took place from like this $50 to like $70 range. So there's a lot of buyers and sellers in this area. So I don't expect it to just break overnight. But let's keep in mind that, this thing left a massive, massive gap back here at like $28. So remember what happened? They got a Gatorade fountain, and some of the people didn't get to vote on the Gatorade fountain. Maybe they want their water fountain back, and the water fountain was at $28. So when everybody gets there, when the whole office is back in session and everybody gets to vote, then we can decide, is this thing worth 50 bucks or 70 bucks or whatever. But, you know, right now, who knows? Because only half the people got to vote. So that's why it's so important to pay attention to these gaps. You know, the same way we overshot this gap and left the gap right here. And the fact that this thing is having massive gaps all the time, and there's crazy like after hours trading taking place and these like gap downs, it tells you that there's something going on behind the scenes with this. You know, what is it? Is it insider info? You know, are they, you know, doctoring up the numbers a little bit? I mean, obviously this earnings call, you know, let's look at the earnings. What were they expecting? Well, as reported, -5 cents. Estimate, -10 cents. So the surprise was a beat. They beat the earnings by 50% and sold off massively. So what's going on here? Is this ad revenue because all of a sudden Apple has, you know, some stuff going on? Is this, you know, fudge numbers? Is this, you know, less time on here because people are on TikTok thoughting it up? You know, combination of all these things. Is this the end of a parabolic bull market? I mean, you could speculate whatever you want. You know, probably a combination of all those things. You know, you can only thought it up for so long before eventually, you know, it catches up to you. But the 236 lines up with our green support right here. So like high 40s, low 50s seems realistic. At which point in time, 35 bucks would be our 382. And then, you know, assuming we get back down to the 0.5, $25. So, you know, if you got in at 90 bucks, 80 bucks, whatever, and it goes to 25, you're probably not going to be loving Snapchat. But let's be real, you know, did we ever come down here and fill this gap at $13, $14? Probably not. Probably not. So do we have to fill this one? Maybe not. You know, this could easily be a breakaway gap and we never see those prices again. But we are below the 200 exponential and simple. We saw some extreme violence taking place right here. So, you know, again, there's going to be a scalp opportunity on Snapchat. It's just a matter of when. And also, will you be able to utilize it as it's probably going to be another gap up or down or like after hours trading when this takes place. You know, months back, I saw a statistic, and I can't accurately quote it because it was months ago, and I'm sure it's changed a ton since then. But it said, like, if you take the, like, gains and losses, like the percentage movements on the stock market, during active hours versus after hours, and it was like 75% of all moves have happened after hours, and then the other 25 are during active hours. So what does that tell you? Like, you could play the game, but if you're not in the game, you know, when the whistle blows, you only get to participate on what's left. You know, like you're the guy on the bench sitting there just waiting to get called in. So maybe you get to play a couple minutes when someone gets injured, but you don't get to, you know, reap the rewards if you're not just in the game all the time, which is all part of that Pavlov's dog experiment. You know, you blow the whistle enough times, get people salivating, and then they put their money in and feel comfortable, and then the bottom drops out and you get snapped. Apple, you know, fundamentally, there's all kind of crap that would tell you this thing's going to sell off, whatever, but I mean, it's strong. We got a breakout of this long time consolidation. I thought I had a different triangle in play here. Man, do I have to just delete all these charts and draw them all over again? Or vice versa? Oh, whoops. We have basically something like this taking place, depending on how you want to draw it. I look at it like a little bit more of an ascending triangle right there. And then basically once we got the breakout of the ascending triangle, took us up to this level, measure move, and then of course come back down, retest it as support, and then we come back up and, you know, have a little bit of resistance right here. Does it continue to the upside? Probably. You know, momentum in its favor. If we start looking at our longer term time frames, what does it look like? Well, it looks like it's trying to reclaim the 821 and stop it from crossing after a hard sell signal at the top of the range, which is basically what we did last time. But the problem is with a lot of these charts is when we start looking at the longer time frames, the moving averages are converging. You know, they diverge during strong uptrends. They converge as they're getting weaker and weaker and weaker. So while the 200 exponential and simple still look good, our shorter term moving averages are telling us that we're running out of steam. And then we're also seeing quite a bit of bearish divergence on the weekly charts. Here we have a top, here we have a higher high, here we have a higher high, and then here we have a high, here we have a lower high, here we have a lower high. So quite a bit of bearish divergence showing up on some of these mid to long term charts. Amazon, still doing nothing, has been doing nothing forever, will probably continue to do nothing till the end of time. Obviously became extremely overvalued at some point in time, just sideways trading. Looked like it was potentially going to be a head and shoulders, but when we bounced this and got the push back up here, is it possible we get like a double right shoulder breakdown? Yes, but I like symmetry in these charts. At this point in time, do we come back down here and retest 3,200? Probably, but it looks less like a head and shoulders. Does it eventually come down here to like 28, 2,900? Probably, but as long as we buy at the bottom here and sell at the top, we'll probably continue to just do fine on Amazon if that's the route you want to go. Facebook, trash. I would never invested in it. Total trash. Yeah, definitely just a trash bag company. Yeah, I mean, I don't have a lot of limitations on what I will buy or sell, but I draw the line at Facebook. Overall, looks, yeah. Google does not look bad. Bullish control zone, had a little like sell off right here. Tech looking kind of weak. The big tech names looking weak. Some of the smaller ones looking strong. Going into earnings. Are these all overvalued? Is it .com bubble bust? Blah, 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 blah. Netflix, obviously squidding it up right here. Finally got that breakout. As we discussed, measure move has nearly played out. I mean, almost to the dollar right here. Almost there. Let's see that little continuation. There's another Squid Games coming out next. I don't know what Squid Games is. I've only heard from people. I don't have Netflix. I don't watch TV really like that. I don't probably, nor would I watch Squid Games. But, I don't. It obviously did something for Netflix. But the way I look at Netflix is, Netflix is a, streaming service that basically just throws shit at the wall until finally something sticks. So nothing was sticking, nothing was sticking, nothing was sticking. And then finally, Squid Games shit sticks to the wall. We did it. So what happens next? Well, probably a pullback, consolidation, and then we'll see from there. But, some shit finally stuck. Good job, Netflix. We did it. Hooray. All right, let's keep ripping through these things. Let's do our cryptos next. All right, so new all-time high on Bitcoin coming back down. I did not want to see this really break down below the all-time high. You want to see it act as support and continuation. Does it mean it's over? It's just going to go to zero? No. Hard sell signal coming out of the bullish control zone, though. Not great. A couple bearish candles in a row. Bearish engulfing candles. Like, not great. Does it mean this is the end? Well, no, probably not. But maybe. 200 simple above 200 exponential. Seeing a little weakness on the futures chart right here. Not particularly awesome. Did this just like run up because of the new ETF on Bitcoin futures? Yeah, probably. I mean, now what's going to be the catalyst to push it up? Is this a bearish weekly candle? Is this going to be a topping candle? Maybe. I mean, shooting star after a couple strong moves up here. I mean, look, I don't like to call absolute tops and absolute bottoms, but I do know that, basically this is looking like a double top at the moment. Once we get a weekly candle close on the futures above this level, it's going to look a lot better, a lot more convincing. But I mean, that monthly candle, obviously extremely bullish. We'll see where it closes. Couple days left. Really want to see the monthly candle close above, 60,000. If it does not close above 60,000, that does not look good. If it does, it's going to look really good. It's going to look really good. So do we go to 72,000? Do we go to 80-something thousand, 100,000? Or do we go back down and that was it, double top, and the market's done? I don't know. We'll have to wait and see. But I would not rule either one out at the moment. Bitcoin regular chart on the daily. Stochastics crossing back to the upside. RSI moving back to the upside. MACD crossing to the downside. And a couple red bars here. Could go either way. Could go either way. A little more strength on the weekly. Same thing though. Stochastic is below the red. Blue's below the red. RSI is basically sideways. MACD is creeping up here. We did get closes above the previous all-time high closes, which is good. But, typically the spot market is more bullish. And, same thing about voting. It's voting on Gatorade while the water people are not at the office. It's trading on the weekends when only half the market participants are playing the game. So maybe less than half. Who knows? I don't know what the percentages of spot market trading to futures trading is. But, if Wall Street's the big money and it's the one everybody's waiting on and they're going to do the damn thing, then why is everything always trading bullish on the weekends? Well, because the crypto cult participates on the weekends, and the smart money, quote unquote, does not. So overall, though, nothing really changing right here. We're going to know a lot more in the next, couple days. The end of this week, the end of this month, we'll have a lot better of an idea. Again, if this monthly closes at new all-time highs, it's going to look extremely bullish. If it doesn't, it's going to look much less bullish. Will it look bearish then? Well, I don't know. We'll have to wait and see. Are we going to get bearish divergence on the MACD and this rolls over? Bearish divergence on the RSI on the monthly and this rolls over? Bearish divergence on the stochastics on the monthly and this rolls over? We'll have to wait and see. We don't know what's going to happen yet. We could easily get a massive green candle or, leave behind a big wick. It's not unrealistic to think that somebody just mounted the price back up on low volume so they could dump their position at previous all-time highs before this rolls over. A key thing that often happens is you push the price up to a new all-time high and then a throwover or a failed breakout and then it rolls over. But also, if we start getting closes above the previous all-time highs, it gets extremely bullish. And, everybody starts thinking, wait a minute, new all-time highs, going to keep going. Blue sky breakout, let's roll. And either one of those is a valid argument. The truth is, if we're going to continue to see the upside, if Bitcoin, crypto, whatever is going to be bullish, there's going to be a ton of momentum, and we will easily be able to capitalize on that. But if it's a double top, it's going to be a lot harder to get out of the way of the freight train, in my opinion. So we will wait and see. Bitstamp chart, hard sell on the Jewel Thief, TJD, TDMACD, bunch of red histograms. Still looks okay. 200 exponential crossing above the 200 simple. That is good for momentum. We did point out a specific example of what we're paying attention to right before the Rona dump. This was the 200 exponential getting ready to cross above the 200 simple, and then we immediately came down, retested it, and broke down. Is that going to happen again? Well, no, not necessarily. We know right here we got the 200 exponential simple cross, started going parabolic, came back down, retested it, it held as support, and then we went on a parabolic bull run. So is this just our consolidation before the next parabolic bull run? Very likely. Definitely a good possibility. But does that mean we don't come back down here? If we come back down to 45,000, are you still going to be bullish? Are you going to buy the dip? Or are you going to be scared that the bull run might be over? If we come back down to 52,000, if we just go parabolic now, there's a lot that can happen in these charts, and it's important to not just get overly bullish or reckless right now. Somebody had mentioned too, definitely some potential for some bearish divergence here on the weekly too. We have high, we have a high, we have a lower high, we have a high, we have a potential lower high. We won't know until this shows weakness. This could easily continue up here, but we have new highs here on price action. So we have potentially, this looks like it's already rolling over. It is bouncing a little bit, but we have potentially some bearish divergence developing. So we got to be careful with some of this stuff here. We're definitely not seeing the strength you want to see with the breakout to new all-time highs. Typically, you break out new all-time highs, you would expect a powerful move to the upside. Maybe we're about to get that and it just hasn't happened yet. Maybe not. ETH, retesting the highs, just waiting to see what Bitcoin does. Has not been particularly strong. Basically just along for the ride. There's so many other shitcoins people are involved with. No one wants ETH at $4,000. The only reason anybody wants it at $4,000 is because they think it's going to 10. Bitcoin ETH chart, basically just bouncing the bottom of the triangle, bouncing the 200 exponential and simple. Do we get a strong move on ETH back up to the 0.0775 level, or does it top out here? Again, it looks strong, starting to pick up momentum. It looks like ETH wants to outperform Bitcoin. Total market cap, new all-time highs on the weekly, bullish control zone, momentum in its favor. Looks like it wants to continue. Bitcoin market cap dominance, Got above the 821, came back down for the retest. I expect consolidation and then Bitcoin to gain strength. The 200 simple has actually rolled back over blue right here, which is surprising considering how low we are below it. Definitely some bullish divergence. Here's a little clue. I plan on doing a special video in the next couple of days for the group members. Very, very important video that will probably change your life. But just a little clue on it. Here we have our 5-wave structure that took place right here. And then here we have the correction. And then here we have this is the A of the correction. This is the B of the correction. And then this is the C of the correction. And you will notice that the B actually takes out the all-time high. And I had spoken about that way before. It's extremely messy, but that was our 1. That was our 2. That was our 3. That was our 4. Came back down to the top of the 1. This is our 5. And then we have the A correction from the all-time high, or from the cycle high, whatever. A down here. Then we have the B, and the B actually took out the A, depending on what time frame you're looking at, with like that wick or whatever. And then we actually got the C, massive sell-off afterwards. What does that sort of look like potentially right now? Well, that's your clue. If you can't figure it out, I ain't telling you. But yeah. Shibonasti obviously got a powerful move up on the Robinhood news. Pretty... I mean, you don't ever want to see this happen. New all-time highs and more than 50% of the move sells off. So far continuation looks good. Sure. That this candle right here is extremely bearish to me. Very, very bearish candle. So I think what's going to happen here, we're going to push back up here to a lower high, and then this thing's going to get wrecked, crushed. There's also what's the market cap on SHIB? Well, the circulating supply is like 394 million. So just think about that. If it goes to a penny, like people are talking about, SHIB to 1 penny, 394 million SHIB. 394 million. So divide that, or multiply that by your penny, and it's larger than the entire crypto market cap. So you think SHIB is going to be double the crypto market cap on its own? Okay, George. SHIB going to the moon. It's going to be a penny. Yeah. Okay. Sure. Buy something with a low market cap and then moonboy on that. Don't moonboy on the thing with the literally largest circulating supply in existence and then beg for it to go to a penny. Solana, new all-time highs on closes. Looks strong here. Continuation. The Solana train is strong. DOT, new all-time highs. Wants the continuation. Matic, trying to push up here. Had a nice little push up. Shooting through resistance. Looks like it wants to burst up here to like 215. Momentum in its favor. Chainlink finally got above the 200 simple. Consolidate here long enough. I'll push up to like 35. Seems reasonable. And then after that, back to all-time highs. $52. Sure. Why not? Uniswap, breakout of this inverted head and shoulders. Basically, if it just gets above like 27, I think it goes to like 35 to 38 pretty quickly. Nice little 40% trade setup in place. Yeah, definitely has some potential there. I don't know what Nervous. I don't know how they got their ticker, but Nervous Network, basically did exactly what I said. Came up back to the top of the channel, put in this parabolic wick right here. Again, that's that SHIB candle right here. We don't want to see that. We don't want to see a shooting star like that. Got a strong rejection from our red box area from the top of the channel, and now it's just melting back down. Again, I think it comes back down here to like 0.015 and then gets picked back up and just keeps doing the same thing that it just did. FTT, basically back at the previous highs right here. Got a little bit of resistance over its head, but looks like continuation. Looks like it wants to keep moving up here. All these are just going to do what Bitcoin does, though. XRP, still a piece of trash, still total garbage, but it is still above the 200 exponential and simple. It's just so weak, though. I mean, literally, why not just give up on XRP and just join a new clan? Join a cult that's popular. The XRP cult is like the old cult. It's like, oh, a bit of cult. Oh, really? What kind of cult are you in? One that's irrelevant. Well, why don't you just join a new cult that's popular? Oh, I don't know. I like this old cult. BAT, basic attention token, extremely weak. Below 200 exponential and simple, doing nothing. Looks like it wants to burst to the upside here. I think it goes to 80 cents pretty soon, though. Picking up some momentum right here. Stokes look like they're rolling over. I mean, it looks terrible, but it's probably going to 80 cents pretty quick. Doggy Dogecoin, and somebody asked about the liquidity and everything and talking about, how if there's less crypto on the exchanges, there would be less liquidity and there was more likelihood of a capitulation event. Well, it works like this. Actual coins on the exchange, can be bought. So if there's less coins on the exchange and a bunch of money comes in, the price could go parabolic to the upside. But if there's a bunch of liquidity or money or cash or whatever on the exchange, you shouldn't get massive wicks like this when there's sell-offs. But yet we are seeing that. Binance went down to $8,000 Bitcoin from 66,000 to 8,000. So there was just nothing in the books. There was no money in the books. There was no buy orders. Kraken went down. A lot of these cryptos went down 20% instantly on a sell-off. So there was just no money in the books, or somebody just sold massive amounts of crypto. I don't know. Something doesn't add up here. I would have rather Binance come out and say there was a problem with their matching engine and that capitulation should not have taken place. I don't know. Maybe massive inflows on a crypto. Dogecoin, capitulation event, got bought straight back up instantly. That's obviously bots and algos. Finding resistance, 200 simple. Still just trash. Why not just buy SHIB? I mean, it's the cooler version of Dogecoin. Doge is garbage now. Get on the SHIB train, bro. Cardinal beads, trash, still trash. Capitulation level event, below the 200 exponential and simple, or no, above the 200 exponential and simple, but can't even reclaim the 821. What's going on, Cardano? FTM hit our target up here to the upside, almost perfectly. Still got a little continuation of the 1.618, but I think this is probably at least a temporary top, a little bit higher than where we're at right now. Coinbase finally hit our target up here to the upside of the 618. Finally played out our buys after putting in consistent higher lows. This is just looking like a giant megaphone pattern taking place right here. Something like that. As long as crypto is doing well, I think Coinbase is going to continue doing well. Robinhood, on the other hand, basically breaking down all-time lows here, or obviously we had the initial IPO price, but retesting the lows right here. Big descending triangle, putting in some bullish divergence, but does it get one more third drive down here? It looks like it's going lower. Looks like trash. Maybe not popular either after it screwed everybody over. Screwed the cult over. MicroStrategy underperforming Bitcoin horribly. Bitcoin is at all-time highs. MicroStrategy is at 50% of all-time highs. So did Michael Saylor scam everyone? Was this just overpriced? Is there something going on here? I don't know, but MicroStrategy is trash. Just buy Bitcoin. Bed Bath & Beyond still looks like trash. Big gap fill potential up here, but still just looks like trash. Divergence signal showing up. Is it worth taking a shot? 8% downside, 48% upside? Yeah, maybe. Still just trash. There's so much trash, but the trashier something is, the worse it is, the worse the financials are, the worse the company is, better it does. So you could argue that I'll just go all in on Bed Bath & Beyond because it looks like trash. It'll probably do well. I'll split my portfolio between Bed Bath & Beyond and SHIB because they're both winners by being trashy and horrible. GameStop, GME, looks like trash. Barely hanging on to 200 exponential and simple. Looks like it wants to roll over. The cult is dead. They gave up. They had to cash out their GameStop because their mom's yelling at them. They were unloading the dishwasher and they missed their buy opportunity. AMC, gap down here. Looks like trash, rolling back over. Just junk. There's new trashy trash coins and trashy stocks that you can buy now. These just aren't popular anymore. One day we're just going to wake up and AMC is going to be at $13. And, a bunch of people are going to, prematurely end their existence on Earth because they didn't cash out on their GameStop gains. And now they're stuck living in their mom's basement forever, unloading the dishwasher for $10 a week allowance as a grown-ass man or woman. Newegg looks like trash. Horrible, trashy, trash. DraftKings got the move down here to our exact target, to the 236. What's going to happen now? Probably this trade setup. Probably a 17% move back to the upside, at which point in time it gets rejected and comes back down and retests the lows. But with a 5 stop loss and a 17% upside, coin flip, is it worth it for a over 3-to-1 risk reward ratio? Yeah, I think so. Below 200 exponential and simple, officially entering into a bear market. Yeah, but at support. I think there's a scalp in play here. Hard buy signal, bunch of green histograms. Is DraftKings a winner chicken dinner? No, but we probably make some money off of it. So let's take a quick break and we'll do commodities. I want to talk a little bit about gold, silver, and uranium, as well as copper and all that blah, 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 blah. So quick break and we'll finish up here. All right, let's keep it rolling. What's up, Bubblies? Good to see you, man. Got your popcorn ready to go. Remember, if you're just tuning in, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so gold. Gold back here, retesting 200 exponential and simple, 821F cross back to the upside. Stokes are at an elevated level. Momentum in its favor. Let's be real. I mean, gold's at a decision point. This gold is not going to do well if the dollar's strong, if rates are rising, or if stocks and cryptos are doing well. So until we see a shift in the market, gold has so many headwinds. If stocks and cryptos are doing well, gold's going to underperform. If they start to top out, gold will start to perform well. If interest rates are rising, gold's not going to do well. If the dollar is strengthening, gold's not going to do well. So basically, the only way gold does well is if everything else does poorly. There's just too many things fighting gold right now. Too many things. Eventually, I think it will explode to the upside. But right now, everything is against gold right now. It is trying to reclaim the 821 on the weekly. No divergence. Just doesn't look hot. It really reminds me of this right here, though. Are we right around here at the bottom and we're going to get one more push up before we sell off? Are we, did we already get that? And that was this right here. And now we're just getting ready to melt down. I mean, if we're right here, there's a lot of downside. If we're right here, there's a little bit of upside. So if there's a little bit of upside potential or a lot of downside potential, how's that risk reward look? Looks terrible to me. Gold risk reward right now looks terrible to me. And also, unless you're trading paper gold, it's not like you're just going to go out, buy, a bunch of bars of gold and then go sell them a week later because the premiums and stuff. So in my opinion, there's nothing to see here. We really just got to see this thing start moving. Silver, reclaiming those levels, retesting the 200 exponential and simple off of our little head and shoulders, fake out, breakout down here, out of the channel we've been trading sideways in, finding resistance at 200 exponential, could easily get back up to 200 simple at like $25.40. Premiums are still way too high, but there's no more silver. There's a silver shortage, blah, 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 blah. Okay, sure. I did hear a really good analogy the other day on a random channel that normally the guy, oh man, what channel was that? I mean, it doesn't matter. I can't even remember. But it's one of those channels where I see a video from him and sometimes they're good and sometimes they're total trash. He did a really good analogy. I can't remember if it was for silver or something else, but it made me think of silver. And here it is. He basically said, think about the supply and demand for certain things and how they're relevant, and whether the supply and the demand gets consumed completely. And he used pizza as an analogy. And he said that in a given time period, 100% of the supply of pizza gets consumed. Well, all but 100%. There's probably some frozen pizzas that last over a year. Hopefully not, dear God. But anyway, the point is that all the pizza that got made in 2021 also got eaten in 2021. So all the pizza that got made got consumed. So there's no leftover pizzas sitting around. So in 2022, if there's no new pizza and there's no old pizza, there's just no pizza. But if there's a bunch of new pizza, but demand is higher, there might not be enough. If demand is lower and there's the same amount of pizza, then, the pizza prices might go down. So the idea being is that leftover supply that's like still in the market is an external factor on supply and demand. Because people normally think of supply and demand as like a single thing. If more supply comes online, prices will go down because there's more pizza with the same demand. If the same amount of pizza gets made and there's more demand comes online, prices will go up because now people are willing to overpay for pizza. So you have that direct relationship between supply and demand, but people don't take into account the remaining supply. Or, like for gold and silver, you start thinking about like the supply dynamic and demand dynamic as, people talk about like Bitcoin. So basically with silver is like the opposite of pizza. Pizza completely gets consumed every year, so there's a direct relationship. And if there's less supply or more demand or vice versa, you can see big spikes in the price. Silver is the opposite though. Silver, obviously, there's only so much mined every year. And like maybe we're operating at a deficit for a couple of years, whatever. But the fact of the matter is there's tons and tons and tons of silver all over the world that's already been mined from the ground that's just sitting around. And if the price goes up high enough, that supply will come back online. Like how many people are hodling silver, but if silver goes to $50, all of a sudden they're dumping it, or $100 or $200 or whatever. So the upside potential on silver, like short term, till it eats through all this supply, is very, very limited. Not like with pizza. Not like with pizza, if all of a sudden there's a ton of extra demand comes online with pizza and there's only so much pizza, there's not a bunch of like pizza just sitting around at people's houses that they're just going to start selling. It's the opposite. There's no extra pizza just sitting around. And that's why the supply and demand dynamic on silver doesn't work as good as some of these other things do. And we're seeing a lot of that with like uranium too. For uranium, there was a massive amount of supply that came online when the price was high. And that was like decades ago. And now we've just been eating through that supply for decades and decades and decades. And the price has been low and nobody's making any new uranium, but somehow there's still uranium because there's a ton of supply just sitting around. And now it's finally getting consumed. And now we're finally starting to see, okay, wait a minute, if we keep it up at this rate, we're going to need more uranium in the future. So producers are going to have to come back online, or the price is going to have to go way up on uranium. And then the producers come back online. So we're seeing kind of like what would eventually potentially play out on silver, for there to be some massive bull run on silver where it goes to like $90 or let's say 50 and then 90 and then 500. Well, how long is that going to take to happen? It's going to take decades because there's so much supply just sitting around that would come back online that doesn't need to be mined. Because people are like, yeah, but we're mining a deficit. There's less silver being mined every year. The like silver guys are like, but there's no more silver. The prices and the premiums, and we're out of silver, and the mint and the blanks, and it's got to go to 1 million because we need it. It's silver. No, shut up. You're dumb. Use your brains. How long did people sit around in uranium for 20 years talking about how we're mining at a deficit? There's less uranium coming online because we need the uranium for the nuclear power. And if we don't make more uranium, we're going to run out and all the nuclear power goes away. No, shut up. It took decades to burn through that supply. And what's the difference between uranium and silver? Well, there's not just like tons and tons of uranium sitting at people's houses or in coins or whatever. Like uranium is the type of thing where, you know, you have to safely store it and keep it and like be registered and licensed and all that stuff. As where with silver, if silver shot up to $500 tomorrow, how many people are taking everything they own, jewelry, coins, bars, everything they own made out of silver, and taking it to a pawn shop to sell it? It would literally take decades to burn through all that silver. So you're like, yeah, but solar panels use 1/2 ounce of silver and we're going solar. No, shut up. You're dumb. Silver people, the silver gorillas or whatever, the silver backs, you're dumb. I'm sorry, but you're dumb. I love silver. I love gold. There's strong arguments to be made about them. They have historically great time frames and history and all that stuff. But please, use your brain. Use your brain. No. The answer is no. Sorry. Silver is getting ready to no. No. Is silver going to $30? Maybe. Is it going to 50? No. Is it going to 90? No. Is it going to 500? No. No. If you got another question, is it going to? The answer is no. Okay? It's probably going to the teens before it goes to the 50s. So please, silver people, use your brains. I know it's hard. I know it's hard. You've probably been drinking too much of the colloidal silver and it's starting to cloud your brain function. But the answer is no. So should you invest in silver? No. No. Is this financial advice? Also no. So remember, no. Anyway, so silver, no. Gold? Probably not, but maybe. All right, so we got that done with. Man, these silver guys are just so stupid. They don't realize it, but they sound like the GameStop and like AMC and like Shiba Inu guys. But it's like at least pick something that's like a fad and popular that has like chance for like some kind of like popular run up before it's trash. Silver is great long term, but you can be waiting for like 30 years. Have fun waiting for 20 years while everybody else gets rich and you're just hodling your silver because you're dumb. So anyway, gold silver ratio, it looks like it's selling back off here. Silver should be strengthening in comparison to gold. I think it puts in a higher low and then creeps back up here. I still think this goes to between 80 and 90 and then eventually goes back down to like 30. So platinum hit our first measure move, chewing through the resistance. I think it gets up here to like 1,111 sometime in the near future. There's strong fundamental argument for a platinum in the future. There's also like short to medium term, strong fundamental argument that we're not going to need a bunch of platinum if we can't make cars because there's no semiconductors. So First Majestic, these things are all just retesting their 200 exponential on simples. But let's be real here. Bull market, bear market. So we just entered into a bear market. This was our retest of the 200 exponential on simple to try to reclaim them before we just continue to the downside. So careful with these miners. Same thing here. This is Silver Juniors, which is First Majestic and Friends. Same thing. Bull market, beginning of bear market, rejection, continuation to the downside. So USAS, extremely bearish, but short term bullish play here. Obviously, we talk about that trade setup quite a bit, but downside. Pot stocks, attempted to reclaim this level and enter in the bull market, failed, back into the bear market. Reflex rally back up here. Could not even get the 821 cross on Tilray. Probably going to see continuation of downside. 200 simple rolling over. Beginning of a bear market confirmed. Pot stocks going way lower. Maybe. I mean, Tilray, $7.50 all in. No, probably not. But definitely going to be buying some. But probably going to 750. ACB, terrible, horrible bear market. Terrible bear market. Is this the bottom? Maybe, but was this the bottom? Was this the bottom? Was this the bottom? Was this the bottom? Are you broke now? Are you living with your mom? Did you run out of money? Did you take your own life before it ever went into a bull market? Well, you're not listening to this if you did, but if so, I'm sorry. Sorry for your loss. CGC, Canopy Growth, terrible. Looks horrible. Looks terrible. Definitely worth paying attention to, but clear bear markets right here. So, can't even get the 821 cross back to the upside. And if we did, would it just look like this? Probably. I mean, these things are going to be massive values, but is now the time to just start buying them? No. Another 40% downside probably, but worth watching. We're watching them because eventually, but not yet. Uranium. Okay, let's talk about something bullish here. So obviously uranium is like silver, but for people with a brain. The monthly uranium chart was in a bear market since, this is URA, the uranium ETF, since 2010, 2011 roughly, was in a bear market. Switched into a bull market technically in like the end of 2020. So are we at a temporary top? Maybe, but I mean, what kind of upside potential does this have in all reality? Probably a lot. We hit our initial target, 77% to the upside. Next target, 153%. So another nice little move up here as we chew through these fib levels. Are we topping right now? Probably short term we are topping. We're seeing the stochastics looking like they want to cross back down and leave the bullish control zone. All green histograms, blue slope. So if you buy uranium right here and then it sells off, back down to 21, loses a quarter of its value, down 25%. What are you doing? Well, I mean, if you're just going to buy more, sure, by all means. Dollar cost average on the way down. And then, you're good on the way up, whatever. Not financial advice. But, if it goes to 42 from 21, that's a dub. But the truth is, this is probably going to new all-time highs. Is uranium entering into a cyclical bull market that's going to last another decade or 20 or 30 years? Probably. So, I mean, I'm not going to tell you what to do, but is this the type of thing you just throw in an IRA and forget about and just keep buying? I mean, in my opinion, yeah, it really is. But, again, on this monthly here, are we near the top? Yeah, we really are. If you weren't a buyer right here, don't be a buyer right here. But, the difference between 21 and 28, if it goes to 150, you get it. UEC, same thing. Looking tired here, breaking out, new highs. But when we look at the longer term chart, we're at the top of the range. So while it does look bullish overall, I mean, this one goes back to 2006. While it does look bullish overall, if this is our range and our top is up here at 789 and our bottom is, let's say by closes down here at 27 cents, $4 is pretty close to, $8 and very far from 27 cents. So got to be careful with some of these things. Do we get that wave 5 up here, that extra little push, up to 630? Yeah, but at this point in time, it's only a 50% move and we're at the 786 resistance. It's just not, I mean, I'm all about uranium. And if you don't care, if you're not a trader and you're just looking to invest, I think uranium is a great investment. Some of these ETFs and stuff, some of these royalty companies, etc. But at this price, Do I think short term you suffer more drawdown than you do upside? Probably. CCJ, same thing. Cameco, if we just go to the monthly, reclaiming the 200 exponential and simple, does this thing just have, it looks like we're in. That was our wave 1, our wave 2, our wave 3, our wave 4, and it looks like we're in the wave 5. So it looks like we're at the end of the short term move up in uranium. Does it go up another, $15, $18? Do we see another 60% move to the upside? Yeah, probably. I mean, maybe. Sure, possibly. Are you going to be better off in the long run having it than not? Yeah, because you're not going to want to buy up here at 60. But the truth is, I mean, this uranium is just played out short term for now. Does it still have another 9 to 20 years in a bull market? Sure. But short term, are you going to be able to suffer through, a 40, 50% drawdown? I mean, I don't know. You tell me. URNM, North Shore Mining, ETF, same thing. I mean, and you could see it over and over again. It's a great time to be in uranium, but it's a great time to get in uranium. Only you can answer that. I mean, this thing's gone absolutely parabolic from like $15 and now it's up here at almost 100. So massively, massively bullish on uranium. Massively bullish. But right now, for an entry, if you're not already in it, I mean, you're just like FOMOing into SHIB, I feel like. Copper, same thing. Massively bullish on copper. But is now the time to get in? I really don't think it is. Especially, if you're massively bullish on copper, wait and see what happens with inflation or deflation. Okay? Because if I'm right about deflation, copper's going to get wrecked. If I'm wrong and there's massive inflation, there's plenty of upside on copper. It'll go parabolic. But we're at all-time highs, getting a hard sell signal, leaving the bullish control zone, showing weakness on the chart. On the monthly chart, after a double bottom, are we going to now get a double top? I mean, I would rather get this at $21 than $28. But, is it going to go to zero? No. But, can you suffer through a 3-year bear market on copper? Or 5-year bear market during the capitulation event? I don't know. I mean, again, lithium, same thing. Massively bullish on lithium, on nickel, on copper, on uranium, on silver, on gold. All these things, I'm massively bullish on them long term. But do we still have another year, 3 years, 5 years worth of like rampant speculation in like stocks and shitcoin cryptos and like tech and all this like trash that just completely outperforms them? Yeah, we probably do. Hydrogen, same thing, massively bullish, just not right now. Lumber, is this going to be the giant head and shoulders pattern? Almost completed the trade, like less than 1% off of our target, but still bear market. Under the 200 exponential and simple, trying to reclaim them. If we reclaim them, maybe we move back to the upside. Same thing with copper though. Is lumber just going to start going to new all-time highs again? Maybe, unless we start seeing deflation. Are we seeing signs of potential deflation starting to kick in? First it was inflation. Now everybody's talking about stagflation. And then soon everybody's going to be talking about deflation. What is the revised GDP estimate for the United States? 0.5 now? So we went from 6. They were saying we're going to have a 6% increase in GDP. And now, annualized, it's down to 0.5. So by the end of the year, what's it going to be? 0.3? And then next year, is it going to be 0 or negative? Is China having deflation, negative GDP numbers? Is China the canary in the coal mine for the rest of the world? Is there a bunch of other countries with negative GDP numbers? Did we literally print like $40 trillion and pump it into the economy and still got 0.5, 0.5% of GDP growth with an extra $40 trillion? So without that 40 trillion, what's the GDP? Without that government spending, without that helicopter money, what's the GDP? It's negative. So is there deflation already happening and they're doing everything they can to try to prolong it or stop it? No, it's inflation, according to Jack Dorsey. According to Jack me off. Dorsey, what a dumbass. Caterpillar, again, basically in a bear market. 200 simple about to roll over. Retest, looks weak. Do we see some kind of like pushback up here? Could easily go to 215. Could easily go to 215. Deer is able to reclaim these levels a little bit, staying slightly more bullish. Slightly more bullish, but there's now a lot of chop over its head, starting to look like a double top right here. You know, an Eve and then an Atom. Neckline down here at like 320. You know, it's probably just going to range trade between 335 and 350. AM and Terrell Midstream in this trade still, obviously. I'm in this position from way lower prices too, though, but do expect this to play out. 25% push up back to the 786, $13. Still very strong. Very, very strong. Cemex, much less strong, breaking down, losing the 200 exponential and simple. What is this telling you? Wood doesn't look so great. Copper doesn't look so great. Cement doesn't look so great. All the stuff that we build things with don't look so great. Housing starts doesn't look so great. What's going on here? But inflation though, right? But inflation. Huh. Maybe. Or maybe trust the people that build all the stuff. CLF, Cleveland Cliffs, nice, powerful candle right here. Nice bounce off of the 200 exponential and simple. Nice gap close right there. I mean, I don't know what's going to happen with this, honestly. I thought this was going to break down and see continuation already. When we broke out of this channel, you know, I thought we were going to see more downside. We see this often. You break down from a key level, you put in a new high, but fail to reclaim that level and then sell off. Is this just going to be a lower high and then we sell off here? I really think it is. But, you know, iron and steel, like, look strong right now. They really do, especially like U.S. But again, we'll see. Does this roll over? Does it continue to the upside? You know, I could go either way on this. You know, could go either way. Ford, new highs. I mean, it looks like it wants to roll over here. Again, a lot of this is like unions and EVs and market share and transitioning to clean energy and all this stuff. And then meanwhile, they're like closing down plants and massive semiconductor shortages and, you know, revised earnings much lower and production problems and all this stuff. So why is it just floating up? Well, we're in a melt up. GM, a weaker version of Ford. Hasbro got that nice little bounce back up, rejected off 200 exponential and simple, massive capitulation candle, continuation to the downside to our target of like 82. Yep, sure. Works, losing the 200 exponential and simple, on its way back down to zero. Any sphere topping out at the top of the channel as discussed, as expected, as talked about. Still looking for a scalp entry back here at like 265 for our move back to like I think this one. I think if we can just get back to new all-time highs at $2,200, guys, we're gonna be Shiba Inu rich. Okay, it's 81,000%. If we just get back to all-time highs. Think about how stupid that sounds. People say, if we just get back to all-time highs, it's a double. Well, then, sure. Okay, I'm all in on any then. Because if we just get back to all-time highs, that's 81,000%. So that's the one. If I'm going to say that, if I'm going to go all in on one random piece of shit, this is the one. If we just get back to all-time highs, 81,000%. So if I invest my $19 that my mom gave me for unloading the dishwasher, and then that goes up by 81x, I'll be able to buy a used Honda Civic from the 90s. Nice. And then I'll tell my mom to fuck off, but I'll still live in her basement. Because, I mean, yeah, obviously. But I'm not unloading the dishwasher anymore. Fuck her. Oh shit, I think she heard me, guys. I gotta go. Walmart. That's what I picture when I hear these dumb motherfuckers talking about stuff. I just picture them like in their basement talking trash about their mom, talking about if it just goes to all-time highs. If Shiba Inu just goes to 1 penny and the market cap reaches $5 trillion, I will be a Shiba Inu millionaire. Excellent. And then I will tell my mom to fuck off. But not to her face, because she'll grab me by the ear and spank me, even though I'm a grown-ass man. And I will cry. Walmart, nice little rebound, left a little gap behind, recame in 200 exponential and simple. Was I wrong about Walmart? You know, honestly, I think probably Walmart and the Dollar Tree are just going to crush it. Because I think all the people that were shopping at like normal stores going to have to just downgrade to Walmart and the dollar store. So maybe before you bought groceries at like a normal store and now you're just only able to afford groceries at Walmart and the dollar store. That's actually a legitimate argument. That's legit. I might have to reimagine my vision of the future. There's going to be two classes of people. The rich who shop at Target, and then there's going to be the poor who shop at Dollar General and Walmart. Oh wait, that's actually that's already happened. Western Asset Mortgage Capital Corporation still looks like trash. Broke down from that key ascending support line. There's still an argument to be made for some bullish divergence to play out. 3 drives of bullish divergence, still at the entry area, 18% to the upside. Is there a bunch of other things with the same trade setup, same percentage risk reward that are probably a better place to put your money? Sure, but somebody asked me to look at this, so there it is. MGM, boom, bursty burst to the upside, continuation. This thing is just banging, still just crushing to the upside. And the more, a couple of these casinos are doing very well, including MGM, and then a bunch of them are doing terrible because of China, because of a bunch of other things. So, same with Nvidia and AMC. Do you want to be in Intel or do you want to be in Nvidia? Do you want to be in Taiwan Semi or do you want to be in AMC? I like to long the strongest and short the weakest. I like to bet on the horse that has a high probability of winning because it wins, not the one with like mange that looks like it's about to get made into glue, but it has a 40-1, chance of winning. Underdogs are great and everything, and they're fun and they make good stories, and you can like Rudy it up and everything, but nobody ever makes their money like that consistently. You don't win by betting on, the underdog consistently. So long the strongest, short the weakest. Poor Silver, man. Silver got reamed today. Oh man, the Silver Gorillas. I'm sure to get some unsubscribe. I'm like a masochist for like subscribers. They're like just hanging on by a bit. And they're like, I guess I'll stay subscribed to him for one more video. But if he's mean to Silver, I'm out of here. I'm done with this. Or maybe you guys like it. I don't know. It cracks me up though. But seriously, I'm being honest. Could you have a quick look at chills, bro? You need to chills, bro. I don't even know what that is, but I will check it out. What is that, a crypto or a stonk? Oh, Chili's. Oh, wait, is there only one L? All right, sorry, that threw me off there. The L's in the eyes look like super similar on my other monitor. So, you got a specific, without like doing any research, exchange you want to see it on? One that has like good history? Stamp? Stampy stamp? Chili's baby back ribs. That's all I could think of. I want my baby back, baby back, baby back. Baby back ribs. Binance? Okay, let me switch over. Hang on. It was so much easier when there was like 5 exchanges on here. Now there's like, oh yeah, that's way better. There we go, Chili's. Got you, bro. All right, let's check out the chili dogs. All right, so obviously this thing has gone absolutely parabolic. So we had a big old channel right there. Once we broke through that, straight up Mooney. let's go from a, so we'll go from the top right here, the Fibonacci top at 94 cents roughly, to our little bottom of the pullback right here at like 16 cents. And then we can see, does it look like it's trading technically? Oh yeah. Oh yeah, look at this. I mean, even before we put in the bottom, we're already seeing the top perfectly at the 886. Then we're seeing tops at the 786 perfectly. Then we're seeing a ton of interaction at the 618. This thing topped just shy of the 618 when it bounced back up. We're seeing support right here at the 236. So bots and algos are crushing with this, absolutely dominating. And then again, back here, perfect pullback to the 236. It's currently sandwiched between the 200 exponential and simple, sitting at the 382. I mean, there's, you're basically in the neutral zone right here. We're below the 200 simple, above the 200 exponential. It's basically neutral. It looks like it wants to move to the upside. It's above the slope line, above the zero line, getting a hard buy signal. It looks like it wants to go to the upside, but it looks like a coin toss to me right now. Pretty much a coin toss. I mean, basically, target to the upside is initially the 0.5, 23%. Target to the downside is the 236. So, 21.75%. So it's basically just a coin toss right now. If you get a buy at the 236, you have a much better opportunity. If you get a sell at the 0.5, much better opportunity. But right now, I would say technically there's like a slight favor to the upside. I mean, it's tough to even draw like an ascending support line because you can only really get 2 touches on it, just because this is like basically a flat line support down here. But, basically, I would be looking for a buy at slightly above the 236 off of like this 26 cent area right here. Or you could argue that you would take like a breakout above the 200 simple and then expect to move back up to the 0.5 or continuation to the 618. But I'm not confident that there's a good trade setup in there. I mean, we could probably put something together contingent on. Yeah, I mean, that would probably be what I would be looking at right there. And I don't know if this is something you're already in. I mean, if you're in it, sure, stay in it. And then you can put your stop below, a breakdown of these levels. But this is what I would be looking at. I would be looking at basically an entry off of the 200 exponential at like 30 cents or below with a 14% stop loss, assuming we broke down from this ascending support line, which isn't a great thing because you could easily get, I would do it based on closes because you don't want to get wicked out and then it goes to the upside. But 30% move to the upside, 29%, 14% downside. And then this is really what you're looking for. You're really looking for that same downside potential breakdown from that ascending support and the 236 with the target of the 618. Because we fell just short of the 618 right here. And this thing's trading very technically. Here it was not able to get up to the 0.5. Sold off pretty heavy. And then finally got to the 0.5. Tried to push up. Couldn't get higher to the 618. And then came back down to 236. So what's happening is the bots and the algos are pushing the price, and when they're not able to get where they want to go, they're letting it sell back off, and then they're eventually winning. So I think eventually this wins and gets back up to the 618. So 60% move to the upside, 14% downside, 4.3 risk-reward ratio. Let's look at it on the weekly and see what it looks like. I mean, this is just crazy. But, hey, why don't you ever talk about these back here at like when it's a penny? Where was this when it was a penny? Why don't you bring up Chili's when we got the 821 cross on the weekly? Holler at me then, bro. It's your guys' job to point out these shitcoins before they go parabolic, not after. I'm just busting your chops though. But seriously. Hard sell signal on the weekly. Lower high rejection on the slope line here. Man, I mean, a lot of these shitcoins just look like they're either going to go up or go straight to zero. But I mean, like I said, there's potential for a trade setup there. I mean, if this thing breaks down below the 236, look out below. But it probably does come up here to the 618. Look at that momentum. Let me see what you said, and then I'm going to get out of here. A fan-based token for big clubs like Barcelona, Manchester. Oh, okay, like football or soccer for my American buddies. I was going to get in it at 1 cent ages ago. Well, hindsight's 2020. I was going to get into Sheeb before it existed, and I failed to do that. Yeah, that sucks. I mean, you don't know, though. You don't know when these, like, trash bag. Well, not that this is trash. I mean, it probably is because it's a crypto. And just historically speaking, you know, I can legitimately say with a 99% certainty, without even looking at a ticker symbol or knowing the name of a crypto someone's going to ask me about, that it's probably trash. But that's only just because for every one good crypto, there's 99 shitty ones. It has nothing to do with a specific crypto. It's just, you know, odds are type situation. But I mean, that one may be good. I mean, I don't know. But chances are it's probably trash. But it may be good. But yeah, that's going to do it for today, guys. I appreciate you. Good to see you, Bubblies. Appreciate you interacting with chat. I will see you in the trade group, guys. Yeah, we'll talk more about that. I have a special video I'm putting out this week about the current setup on crypto and what I'm expecting and how everybody's going to get wrecked and we're going to totally dominate them. And they're all going to be our Citadel slaves on the crypto rocket shaped like Peter Schiff made out of pure gold. I'll see you guys later. Everybody have a good evening. Appreciate you all tuning in today. Hopefully you enjoyed the stream. It is 10 p.m. on Sunday with our market look ahead. It is 10/24/2021. Yeah, that's it for today. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. And remember that there are like 490 trillion. There are 500 trillion Shiba Inu coins. So it will never go to a penny. Just remember that. Never. It literally has the largest circulating supply of any cryptocurrency I've ever seen. So that means it has the most supply ever in all of existence. So the likelihood of it ever going to a decent price is close to zero. So just remember that. Just remember, SHIB is literally the largest circulating supply of anything ever. Ever. So it's probably a total piece of shit. Does that mean that I didn't trade it over the weekend? No. Does that mean that you cannot make exponential gains on it because it's shitty and useless? No. But just remember, if you get stuck holding the bag, your little billion Shiba Inu coins are like 1 trillionth of the supply of the worst crypto ever made. That's total trash. Just remember that. So yeah, that's it for today, guys. Appreciate y'all. Appreciate you showing up. I'll buy SHIB then. All in on Shibanasty. I'm a SHIB billionaire. You have $1 billion? No, I own 1 billion Shiba Inu. Well, how much did that cost? It was $9. All right, I'm out of here. Crypto Trend Trader.